Okay, in this lesson we're going to talk about Forex setups for swing trades, and we'll show you some examples. And this is lesson 33 in the 35 lesson package from forexearlywarning.com. Let's go down and look at this article here. So what is a Forex chart setup? A chart setup is when a currency pair is trending in one direction or the other, and then it cycles against the trend. And then you can pick up the trading in the direction of the trend, except you get a much better price. So the charts set you up for the trade entry. Let's look at one example here. This is a Forex trade setup for an uptrend. So in this particular example, we use multiple time frame analysis. So if you look at a larger time frame, and the larger time frame is in an uptrend, then you look for the smaller time frame to sell off against the larger trend, and then as soon as it reverses right here, this is called a relative low. This is called a relative low. Discuss it right here in the text. And it reverses back into the trend on the smaller time frames, and you enter the trade here, and you can start riding the larger trend with an entry point from the smaller time frames. So let me give you a couple of examples here. If this major trend here is a D1 time frame trend, okay, then you would look to like an M30 time frame or a smaller time frame to cycle down and then reverse back into the trend, and you would enter here. If the larger trend is a W1 time frame, this one here, then you could look for a cycle down against the trend on something like an H4 time frame. Okay. And then when the H4 time frame cycles down and then reverses back into the trend, you can start to enter the trade here and then start riding the trend again. So in this case, it would be a swing trade setup because this is a H4 time frame and this is a W1 time frame. Another example, one of the ways to know how to intercept this point right here. There's a lot of ways you can intercept this point right here. You can do it with audible price alerts. You can set a price alert on your trading platform to intercept this price level right here. Another thing you can do is you can look at the Forex news calendar, which shows the economic news drivers that occur in the main trading session or the Asian session. And another way to do it is just to look at the parallel and inverse pairs. So if this is the New Zealand dollar USD, and it's trending up on a higher time frame, then it cycles down. When it reverses back in here to get it back into the trend, it's either because the New Zealand dollar is strong or the US dollar is weak. And so you can look at various New Zealand dollar pairs like the New Zealand yen and the New Zealand Canadian and the pound New Zealand to see if they're all reversing. You can also look to see if the US dollar is weak. So if this is the New Zealand USD building a new trend here, you can look at the Euro USD and the Aussie USD and the pound USD. And if they're all cycling up too, then this is a valid entry using parallel and inverse analysis. These illustrations you see here are sketches of our free trend indicators. And if you want to set up some simple trend indicators that work for multiple time frame analysis, just click on the link to the article here and you can go to show you how to set up our trend indicators for multiple time frame analysis, and they look like this. Basically just a red and green moving average, 512 moving average, and these are just some illustrations of those trend indicators. Okay, now let's repeat the process here for a downtrend. Now we're looking at a downtrend. Okay. So first of all, you always have the larger time frame is trending down, and then the smaller time frame cycles up against the trend, and then reverses back into the trend. This point here is called a relative high. Over here it was called a relative low. Over here it's called a relative high. And remember, when this pair reverses back into the trend, your stop order goes right here, right above that relative high. So you get excellent stop order placement because your stop order goes right above the relative high right here. Then you have this entry point right here, and then you're now trading in the direction of the trend, except you got a better price. So Forex setups are great. Chart setups, swing trade setups, whatever you want to call them. You wait for a currency pair to cycle against the trend, the major trend, and then it's very safe. This method is used in all markets. This method is used in, if I can show you here, on the stocks and commodities and index market, the relative low and relative high method of trading within the context of a trend is used in all markets. And so we're showing you how to do it with this lesson for Forex trades. So this is lesson 33. This is Forex setups for swing trades. And once again, you can click on this link here to set up some free trend indicators on a MetaTrader platform or any other platform to use with this method. And this method is from the 35 lesson training package that's free on our website from forexearlywarning.com.